Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. And we did end higher in the cattle and soybean complex today, lower in corn and wheat mixed in the hogs. And John, let's talk about soybeans. Back to the plus side after a lower opening with soybean meal scoring new contract highs. And so we continue to trade that Argentina story to some degree, but we can't seem to get above overhead resistance on the charts on the beans.
Yeah, first off, the market's all focused on the Argentina weather again and what it's doing on some of these later crop beans. The quality of that crop continues to deteriorate. Obviously, saw a lot of analysts bringing those numbers down. Do we have a sub 30 million metric ton crop? That's the whisper that's out there. We'll obviously see. But that's got that soybean meal market fired back up again, and that's spilling over into the soy complex. Actually hearing premium levels for cash soybean meal here in the United States. So again, the crushers have some good margins in front of them, and that's helping them step into the bean market. But like you said, 1540 on that May contract kind of seems to be a little bit of a ceiling. So we'll have to see. If you plop a range on this bean market from our most recent low to the recent highs, we're kind of back in the middle of that range here today. So I think the next couple of days will be pretty key, especially with that USDA report and whatever numbers they move things around with here on Wednesday.
So at this point, the meal market you mentioned, the cash market is running above $500. We saw the March contract, which is in delivery, pop above 500 as well. But where's the demand coming from? Is that domestic at this point, or are we just reshuffling the deck here because of the Argentina situation?
I think it's a reshuffling of the deck. Obviously, you look at cattle and hog and poultry numbers dealing with those issues here in the United States. So I'm not sure if it's really domestic demand. Maybe in the eastern seaboard side of things, trying to lock in supplies because, that's an area that's already got some deficiencies anyway. To me, it's a shuffling of the deck chairs in terms of where that export demand comes from. And I think this market's pricing in the possibility that we're going to see a little bit more meal demand here. Brazil, obviously, with that big crop coming, has got their beans going to the export market as whole beans. Some of those beans are moving into Argentina. Maybe they can't quite get those beans there because of the export demand there. So that turns people to our side in terms of the soybean meal market. So we'll have to watch those export sales and see if we get some extra business that comes in here. And, our bean supplies domestically are still extremely tight.
No doubt. And we'll probably get confirmation of that here again on Wednesday. So the corn market, despite some confirmation of last week's rumored export business and the fact soybeans were higher, corn could not manage to close higher because wheat has just been too much of an anchor, or what?
Yeah, wheat's quite the anchor here. And realistically, though, even though we're starting to see some export business, we're still so far behind that we need to get some bushels really moving, and we're not getting that. We did have a couple published sales today. That was nice. We saw export inspections today, 900,000 tons, which was a nice step up and, towards the middle of the top end of the range for analyst expectations. But again, we still just need to see some corn business here that's going to make this market feel a little bit excited that the USDA may not have to make any adjustments on that report on Wednesday and add to the stockpiles. And then you throw in the double-digit losses to wheat and that competing grain as that feed side of the equation gets cheaper. Just makes it tough for corn to rally in that situation.
And that wheat market, HRW KC wheat closed below the $8 mark. So where do we stop here now? And why have we continued to see this relentless selling, even though the funds are still short in Chicago, at least I know, and it spills over?
The funds are pushing this short position, at least to the best of our knowledge, that they still have that on. And, we keep hearing some talk that Russian wheat prices are coming down, and they're in control of the global market right now, at least on the export front. And if those prices are sliding, and then obviously the U.S. prices need to come down with it in order just to kind of secure some demand, which is still really lacking here in this window. Now throwing a little bit of moisture in some regions in the southern plains, and maybe that's going to help out that winter wheat crop in some areas. Again, so just the expectations that supply is there. Now, this market's getting a little bit overdone. I thought it was overdone last week, and now we're adding another leg to it. So somewhere in here, we might get a pretty big snapback. We'll have to see. Just, might be a headline-driven type article or something to get this market to move. But right now, the path of least resistance still definitely looks lower, especially with that close between the psychological $8 value on KC wheat today.
Yeah. Do you have a chart point that you're watching for support in KC wheat or not?
We got to go back and take a look at some of the other areas that are lows in terms of where we are in these charts. We go further back, on the continuous side. Do we start thinking back where we were in 2002 and even before, or 22?
Oh my gosh.
We're looking at some levels now that we haven't seen here for a couple of years. And again, the slope just continues to slide that way. So again, an oversold market though could snap around pretty quickly, but breaking those support levels today opens us up for some longer term historical trends.
Cattle market, more contract highs in the back months of the live cattle and the feeder cattle futures. And it's been a very methodical rally that we've had here, John. Obviously, the tight supplies continue to push this thing, but are you bullish thinking that we're going to continue to just score these contract highs on a pretty continual basis? Or when will we start to see a little bit of a setback?
I'm kind of watching for a winter high here, and I kind of felt maybe that was brewing a little bit last week with some of the reversals on the charts, and there's still in play on the front end, but that cash market is still king, and saw things pulling a little bit higher again last week, and that just keeps some support into the market. Throw in that strong feeder cattle market here today, and in terms of the triple-digit gains and new contract highs, basically across the board as the money really jumped into that feeder market. I don't think being down a couple pennies in corn triggers a $3 rally or $2.50 rally in feeders. But the countryside's been expensive in terms of producers trying to buy feeders. I've heard some talk from producers saying, hey, it's not reflective on the board, and maybe that's finally kicking in here a little bit as we've seen that feeder cash index climb. So again, now it's about the tight supplies, and right now it doesn't look like anything's going to alleviate that here in the short term. And so the cattle market just still feels like it's got some boost in it. But I'm watching for that peak rally somewhere in here because we are starting to get a little overbought in this window. And seasonally, we try to roll over for a winter high.
Yeah, overbought, but I don't feel like we feel real tired yet or anything like that. Hog market, though, that market just can't seem to get any traction. Is it just we have slaughter numbers that are over 100,000 head over last week and last year. And so is that the problem that we're having in this market, or what is it?
It's that tied with some demand at this time frame in terms of getting the product moved. And, we're still seeing a heavy amount of hogs coming through the pipeline, probably more than we anticipated here. April did close its gap in terms of its premium over the cash index. A little more manageable now at $4.75 versus, it was $6, $7, $8, up to $10 here a few weeks ago. So that's kind of maybe leveling things out. I'm watching that spread between April and June seems awfully wide right now too. So it makes me a little nervous for that June contract that maybe April can dig its heels in and maybe we got too much premium there. But it's just about too many hogs and too much product at this time frame. And in the window too, where we've got a lot of competition for meats, and then pork could be one of those areas that's just going to lack the demand side, especially internationally and as well as here domestically.
Yeah, it's a head scratcher, though, as low as pork prices have gotten in the store for sure. All right. Thanks for joining us, John Heinberg with Total Farm Marketing. That's Markets Now.